2026 is shaping up to be the year where the biggest money shift happens. And it's not the way most people think. Some investors are moving into real estate, while others are loading up on stocks. The real question is, which one is the smarter bet right now? Today, we are breaking down real estate versus stocks in 2026, where smart money is heading, and how you can ride the trend. Let's start with the big picture. In 2026, the world is facing two major forces: rising interest rates and high inflation. These two forces affect both real estate and stocks, but in very different ways. And that is why smart money is shifting. Real estate has always been known as an inflation hedge because property values and rents tend to rise when inflation rises. Stocks, on the other hand, are still the fastest way to grow wealth, especially in a recovering economy and a tech-driven world. But the real question is, which one will outperform in 2026? Let's break it down. First, real estate. In 2026, the real estate market is no longer the easy money era. It is a new era where only smart investors win. Higher interest rates mean mortgages become more expensive, so fewer people can buy homes, which slows down price growth. But here's the twist. Rental demand is exploding because people can't afford homes, so they rent more. This creates high rental income, which can beat inflation and provide consistent cash flow. Smart investors are not buying in old, crowded cities. They are moving to suburbs, secondary cities, affordable housing markets, and industrial real estate like warehouses. These areas offer higher rental yields, lower risk, and strong long-term growth. Now, let's talk about stocks. Stocks are not dead in 2026. They are just changing. Tech stocks are still leaders, even after a big correction, because tech companies continue to dominate. But the new trend is that value stocks are making a comeback. Companies that make real profits, pay dividends, and have stable cash flow are now the favorites. At the same time, AI and automation are not just trends, they are a revolution. Smart money is moving into companies that use AI to boost profits. Energy and infrastructure stocks are also becoming stronger due to global supply chain changes and geopolitical uncertainty. So, where is smart money heading in 2026? Here is the truth. Smart money is not choosing only one asset class. They are diversifying between real estate for stability and cash flow, stocks for growth and innovation, and alternative assets for protection.